What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the SOFI earnings. We actually covered the earnings on a live stream. This was the first live stream that we actually did the earnings at that given moment. Usually I wait 5 to 10 minutes after. So we did it live, and guys, I was reading it instantly out live, and the numbers look good. Continued to read inside of the numbers, and the numbers continued to look even better. If you look at my reaction for the Q1 earnings, I felt a little bit, just not as excited because the guidance was so soft. SoFi came out and gave us an amazing Q3 guidance for this next quarter that we're in right now, guys. Record revenue is heading our way, record EBITDA, and record net income. I mean, the highest net income they've ever guided for on a earnings report, guys. So right now the stock, we're filming the video at 3:16 p.m. inside of the market, so we still have about 45 minutes inside of the market, and it's just been the craziest manipulation that I've ever seen on an earnings report. Because remember, guys, this stock right now is 18% short. Like, people are betting on this stock to fail. Last earnings, our earnings report came out, and guess what happened? The stock finished the day around 6 to 7% red because of guidance. Well, right now today, we pumped up 7%, we went down 3%, and then right now, I'll show you later on in the video, we're trading flat, green. So the stock's actually green. So what does that tell you? The first thing you need to understand as a retail investor is this earnings report was better than the last earnings report. We're not down 7%. And guys, I'm telling you right now, I think this is just some low volume I'm going to cover with you in today's video to just, knock out all the calls, knock out all the puts, downside and upside, keep the stock flat. And this thing's going to take off when macro decides, interest rates are coming down. J Powell gives us the go ahead. This stock is so fundamentally strong right now. It is absolutely insane on what the guidance they put out for, guys. So I'm very, very excited. Thank you to everyone that watched the live stream earnings with me. We had over, 1,000 people watching the video at once. We have over 12,000 views right now, guys. I really, really appreciate it. But guys, this video is extremely, extremely good. You're going to be very excited. Let's get into it. Don't forget to smash the like button, drop a comment. How did you feel about earnings? I'm really excited to hear your guys' opinions. Let's get into it. All right, guys, take a look. Before we even get into the numbers, take a look. Robinhood chart, we already know, shows you, second to minute price action. So I want you guys to see this. Crazy manipulation today. Like, in the pre-markets, we were down 4% before we even dropped the earnings. So that shows you. Look at this, guys, down 3.7 before the earnings come out. The earnings come out and at 7 o'clock, and it's just flat, barely up. Boom. Explode to the upside, okay? So anyone who bought short-term dated puts, bearish, they're getting smoked in the morning, right? Okay? Calls are going crazy. Everyone's making money. Now look at this. Stock falls down 3%. So everybody in calls, now they're getting destroyed. Everybody in puts are in the money. Now look at this. Bounce back from the puts. Now we're up literally 0.5%. So now the puts are getting destroyed. Now the calls aren't doing anything because the stocks break even. So you see what I'm trying to say? That's all today is just destroy the upside on the options market, destroy the downside. And guys, wait until you see this volume. It is absolutely insane. You have to see it. I literally made a tweet a couple of days ago. I told you guys, how do you squeeze this stock? You need 300 million, 350 million in volume. Look at the last 4 earnings reports. Look at the volume. This is the shares changing hands. Look at the volume. Q1, the last quarter, 150 million in volume. Pretty dang high, and it was a bad earnings report. 286 million, 125, 210 million. Let's take a look at the volume right now into the close. Remember these numbers: 150, 280, a 120, and a 210. Volume right now is 77 million. This might be the lowest volume we've ever seen in the stocks, publicly traded earnings reports ever. Under 80 million. We'll probably finish at like 85 million. So 50 million less than the lowest, and nowhere near 200, 250, 150. Guys, do you see what's happening right now? It is just super low trading volume, moving the stock up and down 5-6%. Everyone's getting smoked that is bullish or bearish because the stock's pretty much flat, 0.5% up, down. This was an extremely strong earnings report. We're going to get into it right now, but I'm just showing you what I'm seeing. You watch my live reaction from 2 quarters ago to this quarter, guys. This was blowing me away when I saw the guidance of what SoFi put out. Let's get into the earnings. All right, guys, we have the members right here, and you can see we added 643,000 members in Q to bringing the total to 8.8 million members. Guys, this was the second highest all time behind that Taylor Swift 717. We beat the 622 from last quarter. So members continue to flock to the SoFi platform. My estimate was for 650, so I was pretty close. Go check out my Twitter, guys. I'm not going to give you guys fantasy numbers, 750, 580, a bearish case number. I'm going to give you guys what I personally think. 750. I was 650. I was 7,000 off. Products right here, 946,000 in Q2, bringing products to 12.8. We could see, it was just a average product addition of 946. We've done this a couple of times, 3 or 4 times. Galileo accounts, guys. So Galileo accounts actually did pretty well, okay? We'll talk about, the downside of what happened to Galileo, but accounts are growing. Accounts are, adding to the Galileo platform. They went up 7 million total, 158 million. Lending and financial services products. Lending actually did pretty solid. It grew 19% year over year. And we look at financial service products, 39% year over year. So very consistent. Same type of growth we've been seeing. Financial services productivity loop, guys. We can see a ratio to financial services to lending products is at the highest it's ever been. You want to continue to see that because that diversifies your risk away from lending. 6.2x compared to lending products. All right, guys, take a look at this. NCL by loan vintage and percentage of remaining unpaid principal balance. Guys, take a look right here. This is what you need to see. This is the big part. In order to surpass the 8% life of loan losses, that's what SoFi keeps talking about and keeps pushing to the bears. On all of the Q1 2020 to Q1 2024 originations, the remaining 44% unpaid principal would have to experience 11% loss rate, okay? And they are saying they are nowhere near those numbers right now, okay? So we are looking extremely bullish on the personal loan book, guys. The Bears, they put these slides out for the Bears specifically, and, we're doing extremely well for what we guided for of that 8% life of loan loss. The Bears can continue to say what they want, but the facts are the facts. SoFi's loans are performing well. All right, guys, and here is quarterly performance. We have record revenue for the company. Look at this, record revenue, the highest in company history. They ended up beating that super Q4 last year, that crazy quarter of 594. We beat it, guys, 597. They beat the top line. I'd love to see that, okay? We finally have a new record revenue, and wait till you see what they're guiding for, guys. It's absolutely amazing. This wasn't an extremely profitable quarter. You can see adjusted EBITDA has dropped down a tick from the Q1. So 6 million down, about 138 million. But guys, EBITDA and profitability is about to go up in Q3. We're going to get to that very, very soon. But you can see they beat the high end of guidance on revenue by 30 million. They beat the adjusted EBITDA on top end by 13 million. And then GAAP net income we knew was a little bit low, 5 to 10. I was a little bit wrong right here, guys. It said about 30 million. So they came in at 17 million. So only beat the high end by plus 7 million. So it wasn't a crazy profitable quarter. It looks like they were pushing forward new growth, new members, second highest all time. And you're going to really get that payoff in this next upcoming quarter. Right now, 2 months to go, Q3. And here it is, guys. This is what I'm talking about. This is what I've been waiting for. SoFi is starting to finally grow up and develop into a semi-mature fintech high growth company, guys. Take a look at the numbers. 625 to 645 adjusted net revenue, guys. We hit 599 this last quarter. Things are about to skyrocket. Let's say they beat the top end by 20 million. We're talking a $65 million jump. That's what they did in that Q4 last year. I was telling you it was the craziest quarter ever. Look at this, guys. Adjusted EBITDA 160 to 165. Looks like they're going for a new record of adjusted EBITDA, maybe around 190 or so. And GAAP net income, this is the juicy part, guys. We hit about 1 cent this last quarter, 40 to 45 million in net income. I could see this coming in at around, 60 million, potentially 4 cents on the EPS. That'll probably come in around 5. Guys, they are starting to print profitability, 5-cent EPS quarters. Before you know it, guys, a couple years go down, and we're going to be printing 50-cent quarters. This is what you've been waiting for, guys. They are turning on the profit machine. Everything is coming together at the exact same time. And here's the full year 2024. They combine, the fourth quarter into here. Financial services net revenue growth of more than 80% versus 2023 levels. They were at 75%. Financial services is continuing to skyrocket even faster. Lending adjusted net revenue of at least 95%. They were at 92% on the low end. So lending is starting to accelerate a little bit slightly. Maybe they take it to 98% by the end of the year. Tech platform net revenue, this is the little red flag, guys. Percent growth of mid to high teens, let's call it 17%. They were at 20%. So it looks like, their monetization of the tech platform is not going as planned. They are still continuing to sign up those members and, additions, but it looks like they have not got, the monetization right for revenue. So they backed it off from 20% to, let's call it 17%. So a slight pullback in the tech platform. We don't want to see that, but the good thing is financial services is growing faster than 95% of all SaaS companies on the US stock market right now, just carrying the entire load for lending slowdown, for tech platform lagging. This is just a beast across the board. Net income 175 to 185. They have increased that. Adjusted EBITDA increase. GAAP EPS 1 cent increase. Tangible book growth stayed the same. Capital ratio over 16%. 50-50 split the same they guided for. So guys, look at this. They started out 14 to 16% growth. The company is now up to 17 to 19% growth. So I think by the end of the year, guys, we're going to see like 22% growth on SoFi, and that's with lending slowdown. This company could potentially grow 30% next year in 2025 with rate cuts. That is where the money is going to be made, guys. And I'm telling you right now, I'm very excited once again for the back half of 2024, but 2025 is going to be crazy across the board. Increase EBITDA by 15 million on the top end. Net income. This was a little bit of a, not a red flag, but this is where we could have got a little bit more excited, but it looks like they're setting up for a big beat. They only increased net income by 10 million full year. Still not bad. They're still up dramatically with the convertible debt deal, and then EPS went up a penny. So everything's looking great across the board. You just had a little bit of a slowdown in tech monetization, tech platform. We got lending on the top, technology on the second, and then financial services on the third. We'll go straight over here, and we'll go to Q1 to Q2. You can see actually lending accelerated slightly from last quarter. So last quarter was very slow. That was the conservative quarter. Man, if they get going again on lending, guys, this is going to be a company growing 30% in their sleep. You can see right here, this is the little bit of a red flag that everyone's talking about. Tech platform, Galileo. It's just stalled out again, okay? We had a nice little jump right here, and then it just stalled out the last couple of quarters. It increased from last quarter, but they're adding users and members, but they're not adding they're adding accounts, but they're not adding monetization revenue. So maybe it's a big customer in the pipeline. They have to, get them fully integrated, signed up. I'm not exactly sure, but we have financial services guys taking over the weight for tech platform. $26 million jump, absolutely incredible. Lending accelerated, financial services accelerated, so the company's doing great across the board. Move over to the balance sheet. It looks like cash came down slightly, and then the total debt stayed near the same. Liabilities stayed about the same. Total assets went up 1 million. So the balance sheet didn't really change much at all, guys. Deposits had a little bit of a slowdown, but I think there's some more details into that. It was like 2 million instead of the 3 million, but I'm sure those are going to be accelerating very soon with how many members they are putting onto the platform. So things are looking great across the board, as you can see. We'll take a look at the stock right now and see how the stock is doing, because we still have 30 minutes to go. But you guys saw in the beginning of the video with that trading volume. So like I said before, last quarter we were down 6 to 7% on the earnings report, and this quarter we're flat. And I think this is the best quarter ever. If you listen to the Anthony Noto, what he was talking about, I mean, the guy was extremely bullish on how the company is performing. I have no complaints besides, tech platform, a little bit of a slowdown, but other business segments are, just carrying the weight. And Q3 is going to be records across the board. And that's going to continue to get the PE ratio on SoFi dropping. I believe it was at 90, but because they just jumped up their net income again, it's dropping to like 75, 80. So the more they increase profits, the lower that PE ratio goes. That's what you want to see. The stock continues to remain flat. This is a buying opportunity, in my opinion. This is the best quarter in company history right now. And I believe, you just got a lot of manipulation inside of the market because, the Fed speaking, you got potential rate cuts. And look at the overall market real quick before we end this video. Here we go, guys. This is the chip stocks. Look at this crap. ARM, 7%. NVIDIA down 6.4. Qualcomm, 6. The market is crashing right now, if you guys didn't realize, okay? Taiwan Semiconductor, 3. SMCI, 5%. Every semiconductor, like I said before in all my videos, these are the best performing stocks the last 2 years. They are absolutely crashing the past 2 weeks. Today's just an additional crash. We'll go over to some fintech related companies. Coins down 4, Lemonade 2.4, Firms up 2, SoFi's green, Palantir 3%, Hood 4%, PayPal, finally getting about. So the market is getting slapped right now for anybody, wondering, okay? Um, all fintech related is pretty much red across the board. And if you look at the indexes, guys, NASDAQ is down 1.4%. Russell 2000 flats. So it looks like we just have to wait on Powell. But guys, I am very, very happy with this quarter. And you can see there's a lot of manipulation going on inside of this stock right now with the macro, the interest rates. And look at the volume. The volume has nothing. Look at my slide I put on Twitter, 150, 200, 250 million volume. We're trading at 80 million volume by the end of the close on the best earnings report in company history. What does that tell you? They are killing it. Profits are about to roll in. No more of this 0 cent, 1 cent, 2 cent. We're going for 5 cents next quarter, guys, and that's going to continue to skyrocket as they turn lending back on again. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. Once again, I want to say thank you to everyone that, tuned into the live stream. That was absolutely insane. That was so much fun. And don't forget to subscribe to the channel, smash the like button, drop a comment. We're going to be keeping you updated daily on all the SoFi updates. Guys, this is a leadership with Anthony Know that you can trust. Once again, my name is Kyle. Hope you have a great day.